Welcome back. Ever wished you had a time machine for the stock market? Today, we're diving into the best performing US indices over the last decade. Whether you're a seasoned investor or just starting, this video is your crash course on where the biggest gains were made. We're talking about the indices that turned everyday investors into millionaires. Let's get started. Let's kick things off with the NASDAQ 100, the tech VIP section of the stock market. This index is home to the biggest and most influential tech companies in the world. Imagine investing in an ETF like Invesco's QQQ Trust 10 years ago. Back then, the tech landscape was already promising, but few could have predicted the explosive growth that was to come. Today, you'd see a 527% return. That's the kind of growth that turns dreams into reality, making early investors very happy. Giants like Apple, Amazon, and Microsoft led this surge, revolutionizing industries. Apple with its iPhones, Amazon with online shopping, and Microsoft with Azure. These companies have not only changed the way we live, but also set new standards in their respective fields. But it's not just about the big players. Smaller tech companies are also pushing boundaries. These startups are the breeding ground for innovation, often bringing fresh ideas and new technologies to the table. The real question, will tech continue its reign, or will a new sector take the lead? Analysts are constantly debating this, but the future remains uncertain. The NASDAQ 100 rewards those who believe in innovation. It's a testament to the power of technology and its ability to drive economic growth. I wouldn't bet against this tech-heavy index. With its track record of success and continuous innovation, the NASDAQ 100 is poised to remain a dominant force in the stock market for years to come. Now let's talk about the S&P 500, the all-star team of the US stock market. This index is a benchmark for the overall market performance. Representing the 500 largest publicly traded companies, it captures the essence of the American corporate landscape. It's the ultimate diversified portfolio, offering exposure to a wide range of industries and sectors. Over the past decade, the S&P 500, tracked by the SPDR S&P 500 ETF, has gained 267.8%, nearly tripling your money. This remarkable growth showcases the resilience and potential of the US economy. While the NASDAQ 100 outperformed, the S&P 500 is all about balance. It provides a more stable and less volatile investment option. It's a barometer of the US economy's health, reflecting the overall economic conditions and trends, reflecting the growth of established companies. Companies like Apple, Microsoft, Amazon, Johnson & Johnson, Berkshire Hathaway, and JP Morgan Chase. These giants drive innovation and economic progress. These companies span various sectors from technology and healthcare to finance and consumer goods, intertwining their success with the US economy. Their performance impacts and is impacted by the broader economic environment. The S&P 500 offers both growth potential and stability. It's a balanced approach to investing, providing opportunities for capital appreciation while mitigating risks. It's a solid choice for long-term investors who believe in the US economy's growth. By investing in the S&P 500, you're betting on the continued success and expansion of American businesses. Not the flashiest, but a reliable investment. It's a steady climb, offering consistent returns over time. Consider the S&P 500 for long-term growth. It's a cornerstone of many investment portfolios, providing a foundation for financial security and prosperity. Let's travel back to 1896, when the Dow Jones Industrial Average was born. This was a time when the financial world was just beginning to take shape, and the Dow emerged as a pioneering force. The Dow, tracking 30 large US companies, has become a barometer of the American economy. It is often seen as the stock market's wise old sage, offering insights and stability. Over the past decade, the SPDR Dow Jones ETF, DIA, delivered a 235.6% return. This impressive performance nearly tripled investors' money, showcasing the Dow's potential for growth. While the NASDAQ and S&P 500 outperformed in certain periods, the Dow plays a different game. It's about stability, reliability, and long-term growth. It doesn't chase the latest trends but focuses on enduring value. The Dow's 30 components represent diverse industries from technology to manufacturing, forming the backbone of the US economy. These companies are leaders in their fields, companies like 3M, Boeing, Caterpillar, and Coca-Cola. They are household names that have stood the test of time. These blue-chip companies have weathered economic storms and emerged stronger, demonstrating resilience and adaptability. The Dow is a solid choice for long-term investors valuing stability and reliability. It offers a sense of security in a volatile market. It's like an old friend you can always count on, providing consistent performance and peace of mind. Consider the Dow for a stable investment. It's a wise choice for those looking to build a robust and dependable portfolio over time. Let's zoom in on semiconductors, the unsung heroes of the tech world. VanEck Semiconductor ETF, SMH, tracks the MVIS US-listed Semiconductor 25 Index. Over the past decade, SMH delivered a mind-blowing 1,000% return. Demand for semiconductors has skyrocketed, driven by tech advancements. Companies like Taiwan Semiconductor Manufacturing, NVIDIA, and ASML Holding lead this revolution. It's not just consumer electronics, the automotive industry and data centers also rely on semiconductors. The future looks bright for semiconductors, with continued growth expected. The demand for chips will only increase as technology advances. Consider semiconductors for a high-growth investment. Whether riding the tech wave with NASDAQ, diversifying with the S&P 500, or sticking with the reliable Dow, the last decade showed tremendous growth. But remember, past performance isn't a guarantee of future results. Do your research and invest wisely. Investing is a marathon, not a sprint. Stay informed, diversify, and invest for the long term. Thanks for watching. Hit that like button if you enjoyed this video, and subscribe for more stock market insights. See you next time.